Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Oh, that's all right. It's fine.
Joel.
Well, yeah, we'll accent the Joel. Well, hey, we're live actually, right, Jonathan? So I am excited. I've been doing this for the last 5 years. And the reason why I go live is because there's just too much post-production afterwards.
Yeah.
And there's a delay to get content out. And you're going to laugh, but there's a parallel to a rapper, right? So I think it's Tekashi 6ix9ine. I saw his documentary, and something that I think was crazy with Tekashi 6ix9ine, the reason why he went viral was obviously he did things that were a little left field in some of his content, but what really helped is he just got content out really fast, right? So whenever he had a new track, he would just push it out. He wasn't too worried about like making it pretty, getting the post-production out, but I think just definitely going live and getting the content out is just definitely a great way to get knowledge and build an audience at a faster velocity. But enough about me and plugging what I'm doing. That's not really important right now. What's more important is my guest that's on the show, Jonathan Hung. I've known him for probably a few months, but we've done some really intimate, great things together. I got to go to LA last week. He was kind enough to host a dinner. We kind of co-built that together, and it was an amazing turnout. Everyone seemed to be really happy. And, I'm also, I've been building this fund manager accelerator for the last 5 years. So excited to, have Jonathan be part of that. But I always like to highlight really successful, interesting people as they're going through their career journey. And, I'll give a quick overview on Jonathan, and then, I'll have you double click on it and go into more detail. But Jonathan was a successful entrepreneur in the past. He's an accomplished angel investment after making, I think, hundreds of investments, started to build a track record. And as you were kind of continuing to build your family office out, I'm assuming you're looking at all different types of asset classes, but also building Entrepreneur VC. I remember reading Entrepreneur when I would go to Barnes and Noble. So I would go to Barnes and Noble and like buy a Frappuccino and like I would open up Entrepreneur, I'd open up Fast Company. And I think, in our session yesterday, you showcased some of the biggest billionaire unicorn founders on the front cover. So I want to unpack all of that, but I think all of that starts from the origin story. So tell me, just backing up, you probably haven't done this in a while, and I think this is kind of a healthy exercise, but let's walk through kind of like where you grew up, what you studied, let's talk through your formative years, what your parents did, what you thought you would do, and, talk through a little of that journey, and then I'll probably interject in.
Yeah. I always tell people, I don't care what school you went to, I was the stupidest, 18-year-old. I thought like my life was over when I didn't get into an Ivy League school, because it's always like, I didn't have yes, do I have a Tiger mom? Yeah, she born a year of the Tiger, but she wasn't like, oh, I got to learn how to play the piano or do all these things. But, they spent a lot of time and money as an only child on my education. And I was just like, I was just like, the schools I got into were like USC, Berkeley, and Georgetown, and I thought it was like a failure. It was so stupid, because you're just a kid, you don't know anything. And I'm lucky I got to go to USC and I got to stay home, and from that it changed my whole career path. I got to go do some amazing internships in Washington D.C. I was one of Secretary Elaine Chao's interns with Department of Labor under George W. Bush, and then the following year I was at the State Department when Colin Powell was the secretary. For me, it was just about learning and being a sponge. And it was more about the EQ side, not just the IQ. And I take that to everything I do going forward. Fortunately for me, after that, I attended some other great schools. I went to LSE for one of my masters. After that, I came back and I worked for Morgan Stanley during the start of the Great Recession.
Yeah.
Nothing like being there, watching it, like the Dow's over 40,000. Like back then, that was like, what? That'd be unheard of. Thinking like where we were, the S&P was at 666, going way down. I mean, losing on like all these mortgage-backed securities and all this stuff, and it was really eye-opening. I was really understanding like, wow, it's so easy to spend money. It really
Hmm.
is really, really hard to make money.
Yeah.
And from, Morgan Stanley, I went to UBS with my team, and then it was great getting that, like, the kind of like the CFO financial advising side. But I went back then to get another master's at MIT for supply chain, master's engineering there. Spent a year doing that, and then I got to go work for a company called Cummins, and they're based in Columbus, Indiana. But I've never been to Columbus. I actually went to Memphis for my interview, but I had the opportunity to go to Shanghai, and I was working for Shanghai for a little under 9 months before I had to come back home because I had to take over my family business, and that's where the journey begins. My entrepreneurship is my father built a very successful contract manufacturing business. When you think of what we did at United Overseas Textile, it's basically, you think of it as Foxconn, right? Like, you have your iPhone, right? Well, this shirt, someone has to make it, right?
Hmm.
Nike doesn't own the factories,
Yeah.
right? Ralph Lauren doesn't own the factories, so we owned factories. We did that, and we sold to Costco, Berlin and Co factory. Like, I, I was like a lowly manager, project manager at Cummins, and like became the VP and then eventually the president, because unfortunately my father passed away while I had
Sorry
to
to
work with
hear.
him 3 years into it. No, thank you. And it was just eye opening because it wasn't seeing him as dad; it was seeing him
Hmm.
as the boss, and
Sure.
seeing like a different side of him, and going and traveling from, New York, Vegas, all the locations where our customers are in the U.S., and then going to China, in Hong Kong and Taiwan, and offices and factories there. And it was just a great experience. And then, when I started working at Barrage, that was where our DBA was, I also got interested into angel investing because I was a financial advisor, right? And I knew how to run money. And I was like, oh, I heard about Silicon Beach
Hmm.
out there in Venice and Santa Monica. And I made my first angel investment. The
Sure.
bad thing, the good thing is like going to a casino, right? Like the moment you win, like you get that taste for it. And like
Yeah.
my first ever angel investment was a company called GIFT, GYFT, led by this founder, Vinny. And he sold his company within 10 months. Like,
Wow.
that's really unheard of.
Yeah.
He sold the first data. So I got like a two and a half
Hmm.
X. I had to like add short-term capital gains. I had to roll it over. Thank God I rolled over another great company into Chow Now. And it was just like good. And like I was like going too fast. I was making like 5 investments really quick within like a short 1 month
Yeah.
duration. I was like, I can't keep going at this pace. But then I knew I had really good deal flow because I remember back in 2013, I was talking to a company. I got this deck. It was like, you pretend to buy and sell stocks every
Hmm.
week for a
Yeah.
fantasy game. And I'm like, wow, who would play this horrible game? It was like 20 million valuation, no revenue, and like fantasy stock picking. That doesn't sound fun.
Sure.
And I was like, why is it called Robinhood? So I turned down Robinhood 20 million. So it's
Oh,
like,
wow.
that's okay.
Yeah.
Everyone has an
Sure.
anti-portfolio, but it meant that I was fishing where the
Hmm.
fish were. And
Yeah.
I was networking. It was all about that. Because, like, you know, I've been to some really great schools, right? And at that time, I knew I had to learn how to take over the family business. And I knew I had to get another degree, not because I didn't know how to do business, because I got the best training I could under my father and doing it myself, but to network because I wanted to build my own separate career into venture. And so that's why I went to Wharton. I went to the San Francisco campus, got the executive MBA there,
Sure.
and built my network there. And since 2018, when I graduated, I got probably full time into venture capital. I stopped doing the family business around 2021, right after COVID, dealing with tariffs and everything. But it was the best experience I had, the longest job I've ever had. Pretty soon, VC will be longer, of course, but it was a great opportunity. And from there, I built my network. Like, I always tell people, look, I mean, if I didn't do entrepreneur ventures, I have like all these funny other venture fund names I came up with, right? Like Grudge Ventures, right? Like, what's your grudge? Or my other favorite, like I tell people, like Nepo Ventures, Nepo.vc. I bought that domain. Like, hey, like, we'll make you feel like you're on second base. Like, own it, right? Own
Yeah.
who you come from. I know like people like Jesse Draper. I know people, who have been very successful, and yes, they come from great families. So did I, but I didn't get venture. My father did the
Hmm.
schmaltz business, that Yiddish word, right, for clothing. And I built it myself. I tell people since 2012, I spent till now 13 years, 10,000 hours, more than 10,000 hours, and more than $10 million of my money building up this career. I've had really shitty partners. I've had some excellent partners. I have some really great investments, some real bad ones. That's
Hmm.
the nature of the game. And now at 42 years old, running Entrepreneur Ventures, I know what I'm doing. That's what it is. You just have to take the time. Nothing comes overnight. And now I'm ready to succeed.
No, that's really helpful. And in your experience, how are families, including yourself, thinking about just a multi-asset strategy? Because, obviously
Mhm.
you have, essentially the fund strategy, which is investing in venture. Many of the families that I'm talking to, and even when I went to LA, it was just eye opening. Families are thinking
Yeah.
about sports team ownership. They're thinking about some multifamily real estate. They're thinking about doing a holding company structure and buying profitable businesses, and then rolling that up under some type of holding company. So and maybe the families in LA are different than the families in other regions, but it's interesting. I spoke to a bunch of families. Many of them started from an operating company. So they built some family business. That business did really well. And then they kind of started investing in the sectors of like the areas that they know. But then, they meet new people, meet new friends, and get exposure to new types of opportunities. And then they kind of educate themselves really fast. Even for me, I mean, I never invested in energy, and then later, educated myself from the founder and from other co-investors,
Yeah.
and got into clean tech and energy, and just spent time in that sector, and grew an interest in it. So would love to know kind of a little more in terms of how your family is thinking about generational wealth. I personally know you have a little one, so how should families think about that, and then also, can that be complemented with like a multi-asset investment strategy?
Yeah, I've been to so many family office conferences. I've been to so many things that they invite me to, and like there's so many service providers. Everybody thinks they know. Like I used to be a financial advisor. You can't like fool
Yeah.
me. And I heard this one great joke one time. Like when you meet one family office, you met one family office, and that's the thing. It's
Yeah.
like no one is the same. And I heard this other great quote from a Canadian family office, and we become friends. And it was just like he said this in his speech. It's like personal dynamics is greater than economic returns. Family offices do not care just about a pure financial return.
Yeah.
That's absolutely true. Because I mean, like, whether I'm fortunate or not, I'm an only child, right? I have a daughter. She's an only child. Now, my goal, hopefully, we have one more at least. But I don't know. Well, it's up to my negotiation with my wife. We'll see. But it is a lot. It's a lot of different things that happens. I heard this stat one time, and it's so true. It's like most family businesses, like it's under like less than 1% get to the third generation.
Yeah.
So I got to take over my father's business, and it's still alive to this day in its form, in its EIN,
Sure.
but not what it used to be, right? Like the Marriott family still run, hey, the Marriott, right? Nordstrom still runs Nordstrom, right? But John, Bill Gates' kids aren't going to run Microsoft. I mean, Jeff Bezos' kids aren't going to run Amazon. The only like really wealthy family that might still run their business is maybe Mark Zuckerberg's daughters, right? Because he has those super shares, right?
Sure.
Maybe one of his daughters will run Facebook one day or Meta. That's the only thing. But most of the time, you don't get to the third generation. So what do you do with it? How do you teach them like where the money comes from? Because there's a saying in Chinese too that says like "fu bu guo san dai," means like wealth never lasts 3 generations. Like my father built this business.
Yeah.
He came to this country $500 and became a multimillionaire. And I know the struggle he went through, as growing up with them. And then, my daughter, unfortunately, will never get the chance to meet my dad, but my mom's still alive. And I joke like, the best angel investor in Los Angeles isn't me, it's my mom, because I had to get her sign off on stuff.
Yeah.
Oh,
because you were investing off the holding company, essentially, right?
Yeah. And like, guess it was like, when my dad passed, like as I said, every family office is different, 50-50. Right? My mom's still alive. There's like, hey, you got to deal with taxes and what you have to do. Like, people don't want to talk about this, but it is things you have to consider. And that's why, like, I'm all about building relationships and seeing how people want to work with me. I understand people need to make money. I understand people have families. You have to pay your bills. I totally get that. But you're going to go farther together than
totally
separate,
agree.
because it's the stupidest thing. Like, you're fighting over pennies.
And I like, I really appreciate, so for me, usually when I go to these events, I got nothing to sell, right? I just go for pure relationship building, meeting good people. I feel like that just always turns into something great. So I'm always happy to just invest in my network and, spend the money to go on a plane, even pay for a membership to a community if it's a high quality community. But what I really liked about the, your attitude with the event is you invited a lot of your own LPs. I mean, you talked about this yesterday. You brought your LPs. I've invited the people that I knew, and it's great because LPs, they get value from meeting other LPs, and if they know that they met that person because of your super connection, then that goes really far, and that builds a lot of goodwill. You know.
Yeah. Yeah, I think about it all the time. Like I'm an LP in over 30 funds. That's the thing. Like I
Hmm.
tell people I've been a founder, I've been a GP, I've been an LP, I've been through a family office, I've been every hat you could wear.
Yeah.
I've even been a founder, started doing a startup, and like I've unfortunately have failed, but I haven't failed in the sense like, oh, it's just failure. No,
Hmm.
I learned from it and it makes me a better
Yeah.
investor. So really most of the time, like there are people who gatekeep. It's the funniest thing. It's just like, I don't know all these people on lists who are multi-billionaires or millionaires, but like I'm pretty sure they didn't do it all by themselves. My dad
Yeah.
didn't do it by himself. So
Hmm.
how could they have? So you have to have a circle of people you trust. I always tell this to like people I mentor from any of the
Hmm.
schools I go to. Like my biggest mistake from USC was like I was like an individualist. I was thinking, oh, I'm too good for this, or like I got to keep fighting. And it's like that does not work. You
Yeah.
have to like when I wish I had like 5, 10 people from USC I'd still talk to this day.
Hmm.
Unfortunately for me, I have it from other schools, from MIT and Wharton, but I don't from USC, and I regret that, And I want to build community. I want to give back to USC as well, and I go to these events now
Hmm.
to build these kind of friendships. But you like forging them when you're 18 years old is totally different. Like
Yeah.
I have one really close friend. He's my anchor LP, Philip Seraphin. I've known him since he was 21 and I was 24. I'm 42 now, right? Like, my God, we have like 18 years of friendship, like for the good times and the bad times. And, we trust each other, right? He told me some really great advice once. It's just like, look, I am a type of person who might like have something that happens to me that lingers a lot. But he
Sure.
said something smart, like, look, when you flush something down the toilet, are you going to go back and go find that in the toilet again, go in the sewage and find it? No, it's over.
Yeah.
You got to move forward, right? And that's so important, not just in venture capital, but in life. It can gnaw on you. You can learn from your failures. Like I'm working on a podcast about that too. Like
Yeah.
my greatest failure, right? But in a good positive sense, not in a
Yeah.
negative sense. And that's what we need to work with each other. Look, are we going to meet a lot of shitty people out there? Absolutely. There's no question about it.
Hmm.
But the ones who matter, who will be there, those are the ones that you'll have for the rest of your life, and you'll be successful.
And I think it's a good skill. I mean, I've worked in corporate America. I've worked with very toxic personalities and
Mm-hmm.
really bad people. But you build character from working with difficult people because it helps you be able to manage any type of person, right, and collaborate with any type of person. And you can always just cut them off and not collaborate with them after you kind of get that feeling. But I'm interested about the dynamic. Again, God bless your father, but like the
Mm-hmm.
dynamic and the way that you partitioned, I guess, business and family, right? Like,
Yeah.
tell me a little
Yep.
bit about like how you guys managed that relationship. I mean, that's got to be pretty interesting, right? Because you're essentially in part of the day he's your boss, but then he's still
Yeah.
your father. And I kind of think about I forgot the guy's name, but the guy that founded Benihana, right? His kids had a really
Oh well,
unique.
yeah, I know Steve Aoki. I almost started a fun with
Yeah,
Steve. God, I've been to his house in Vegas. He's a great
yeah,
guy.
yeah,
It
yeah.
didn't work out, but
So
still friends.
yeah, so I
Rocky,
know I'm
Rocky
buddies
Aoki.
with Heartbeat, the guy Daniel Jerus, I believe, David
Hmm.
Jerus. He runs Heartbeat Ventures, but like
Hmm.
they do a lot of work with artists. So I think he's worked with some of these
Yeah, yeah.
media personalities, and I think he's done some work with Steve. But yeah, so was it kind of like that dynamic where you're always trying to um, you know kind of meet his standard? Because to your point, right, there's the business that was developed by the founder, and then there's the next generation. There's expectations, or was it kind of a different dynamic?
Um, it was a different dynamic
Hmm.
in the sense that he was always the boss when it came to the family business,
Sure.
right? And I've seen that like from
Hmm.
other family businesses where like they're like, no, my dad's not dying, don't you know? Like, like
Yeah.
he's always gonna be the boss. And like to
Sure.
the
Yeah.
day my dad died, he
Hmm.
was the boss. He was the
Hmm.
boss.
Yeah.
I got elevated the title after he died. I wasn't the president of Virage when he was
Hmm.
still alive. That was never
Yeah.
gonna happen. I didn't want that to
Hmm.
happen.
Sure.
So, you know, I think, and he said this to me and was so important. It's like, you're not going to understand until you become a father. And I just became a father last year. And it's like this love and appreciation for someone else. Like you could pick who your partner is. Like I love my wife, she's an amazing person, Caroline. But, when you have somebody so young and precious and you take care of them, you see them grow up, you don't want anything bad to happen to them.
Yeah.
And you want to make sure that they get the best opportunities. Like, uh, my parents gave me the best schooling, the best opportunities, and I had to pay it forward to my daughter.
Hmm.
And so maybe she doesn't want to do venture capital.
Yeah.
That's totally fine. Maybe she wants to
Hmm.
be like her mom and like do equestrian, or
Yeah.
I don't know, like be more an artist, be whatever she wants, but like give her the opportunities. So that's what my dad gave me, and I've seen it with other friends of mine who come from wealth and have opportunities. It's just like, look, try, here's some money and go try,
Hmm.
figure it out. Like, you will get what you want. And then one day it will click,
Yeah.
because it will click for you. I mean, and it happens at totally different stages. Some people knew they were
Hmm.
going to be what they wanted to be the day they went to school, in
Sure.
college. I didn't. I didn't know I was going to be a
Hmm.
VC. I didn't really know until in my mid early 30s, right? Because I always break down life into quarters, like 0 to 20 is the first quarter, 21 to 40 is the second quarter. I'm in the third quarter, 41 to 60. And a lot of
Sure.
people will make more money in the fourth quarter than all three quarters combined.
Yeah.
So I still got time. Like, my father unfortunately died at 66, got one social security check.
Hmm.
My goal is to hopefully outlast him a little longer. And because I had kids like a later stage at
Hmm.
41, you know, that's my goal now, is to be more healthy, invest in things like, now when I'm here at Expo West, right? I'm in Anaheim, and it's like better for you food. So we actually do that for entrepreneurs because we can promote great CPG companies. I'm gonna look at that. I look at baby food or diapers or anything more, like what's better for the next generation, not just for myself. And people change like that always. I mean, it's not just yourself. And some people have kids, some people don't. This is the one thing my dad taught me, I thought, and he didn't teach me this. I found out through his associates and partners and people he worked with. One of our sales guys, Joe, once told me, like, what your dad's really good at? I was like, what's that? He's really good at understanding someone's weakness. And
Hmm.
not like, oh, you're scared of snakes or like, something like you're afraid of a weakness. It's just that, like, what opens you up? Talking about your kids,
Sure.
talking about boating, talking about the Yankees, right? Talking about something that you are passionate about outside of work.
Hmm.
And then, like, you're a foodie, you love to travel. And that's how you get people to open up, because guess what? Like, and I learned that, like, I've worked for Fortune 500 companies. You're just a number to them, right?
Sure.
You're not like when I was at Morgan Stanley. I didn't log in as Jonathan.Hung. I was just some 719 MJ. I always remember because I put that in for 2.5 years, right? And it's just like, that's all you were. And then when the day you're out, you're out. And of
Hmm.
course, I'm sure there's banking stuff why you don't use your name, but look, you're just a cog, right? Like, all the stuff happening in the world today, efficiencies, and, like, they're trying to weed out good versus bad people. I get it. But at the end of the day, like, I was meant to be an entrepreneur and
Sure.
invest in entrepreneurs. And that's where I'm at. And my what I took from my dad, from his experiences, like, I wouldn't have done the way he did. Like, he was like kind of guy, was like a lot of like stick, but gave a lot of carrot. I'm not necessarily a yeller, but I have like that passion of my dad, and I'll get angry, but like not like to his extent.
Hmm.
But you have to be forceful what you want. Like, another great friend of mine told me this, and it was just so important. It's like, if you go to a restaurant and you never ask for a better table, the answer is always no. And just like in sales or in life, like, if you don't try, you don't ask,
Yeah.
how will you get anything better? No one's just gonna assume like, hey, you want a better table? Like, you want, like, here's some money. Like, what? Like, it doesn't work like that in life. You have to be out of your shell. You have to have more emotional intelligence and IQ. That's it.
Yeah, I totally agree. And I would say too, it's just having kids can be a blessing because it just makes you on point. It makes you know that you have people depending on you. So you want to kind of excel not only for your personal excellence, but you just want to maybe create something for your family. And I think just
Not
really
just that, Joel. The key is time. There's only so much time. That's how,
yeah,
whether you're the richest or the poorest person on the planet, we all have the
sure.
same 24 hours in a day. That's how you
Absolutely.
spend your time.
Hmm.
That's it.
Yeah, no, I totally
That's how we're
agree.
all
And
equal.
I watched the documentary years ago, but I mean, it totally is a completely dynamic from the Aoki family. I mean, I think the kids were estranged
Oh,
from
Steve
the
built
Benioff.
everything himself,
Yeah.
He really
Mhm.
did. And God
Yeah.
bless him.
Yeah. No, absolutely. Well, let's talk a little more about the origin story of Entrepreneur Ventures, right? So you're running the
Mhm.
family office, you're doing a bunch of angel investing. How did you meet the founder of Entrepreneur? Maybe share a little more about the media company and
Yeah,
how that company grew about. It sounds like you met the founder and the family office that runs that media
yeah,
conglomerate.
yeah.
And then how did you guys think
I,
about starting a fund out of
yeah.
this?
So as I said, I've invested in a lot of companies as well. One of the companies I invested in, Entrepreneur Media, was on the cap table, and in fact, that entrepreneur, I thought he was a good entrepreneur at first, but it didn't work out, and that's okay. It didn't work out, right? But he turned out to be a scumbag, which is okay. He got me the opportunity to meet entrepreneur, and we're really
Yeah,
happy that we got to be part of this great relationship. I actually got the
sure.
privilege of meeting Peter Shea before he passed, at the old entrepreneur headquarters in
Hmm.
Irvine, California, and I met his son Ryan, and I'm really close to the president of Entrepreneur Media, Bill Shaw, and the VP of Business Development, Charles. They're on the investment team with me. We For years, they've been around since 1977. They have an amazing magazine. They diversified into digital, right? Because 80% of ads now are digital. Like,
Oh,
there's still
digital.
20% is
Yeah.
still the actual physical, right? The newspapers, the billboards, the bus parking benches, whatever. Uh,
Beyond digital.
but
So I don't know if I shared this with you, but when I was working in tech, I had a
mm,
brief stint at Hearst magazines. So I really loved,
oh,
that brand because
yeah,
Hearst had Oprah magazine, they had Cosmo, they had a lot of,
mhm,
it was a really cool, progressive family of brands.
yeah,
And where it's evolved now, just to my knowledge, right? I've been out of the space for a while, but
mhm,
like even when I left, it was programmatic. So it's essentially like an
yeah,
algorithmic stock market where you
yeah,
buy ad slots. And now we've got Netflix, we've got Paramount, we've got Spotify. So we've got all these ad slots
mhm,
across all these different
yep,
channels.
yeah. And that's it. And so, like, they built trust, right? Because if you build trust over time, you see, like, oh, they know the small medium business owner. They have the highest household income viewership, right? Because I think at the end of the day, most people want to be their own boss, want to be own something, right? Like,
Mm-hmm.
the American dream is to own a home, right?
Sure.
Well, why not be your own boss at the same time
Mm-hmm.
too? That's it. Like, cash flow is king. From my perspective, when we spoke with them and I spoke with them, they were like, look, for years they had people come to them want to do a fund, but they're over promising and under delivering. I'm not that kind of person. I hate that. I hate that in my founders. I hate that in GPs. I hate that in people, because it's not about like not keeping your promise. It's just, you have to be realistic. You have to understand like how to set goals and try to overachieve them. Why not over deliver, right? Instead of under deliver. So for them, I said, look, here's what I think is smart. I've been an angel investor. I've done this for over 13 years, 12 years at the time. Hey, I've made some of the best investments with the smallest amounts of money.
Sure.
I've turned like 50K into a million. I've turned 25 into like, 600K. Like, it's amazing. Why? Because here's the thing. I don't know. I don't know who's going to be a winner. Time will tell. Like,
Mm-hmm.
you will tell after a certain amount of time.
Yeah.
But in the very beginning of a company, the first 2, 3 years, you just don't know.
Yeah.
There's so many things that could help fail a company. Like, in my business, we deal with failure all the time. I mean, unfortunately, like, I see a lot of dreams just die, and that's just part of the business. And it's good that, like, there is power law. And I've had a philosophical conversation with other managers about this. Just like, why wouldn't you help portfolio company number 28 if they really needed it? And like, I tell them, it goes back to my thing about time. We only have so much
Mm-hmm.
time in a day.
Sure.
And my number one responsibility is not necessarily to the founders, it's to the people who give me money when we're at my LPs. I haven't managed other people's money since I was financial advisor. Now I am, once again, because before I was just doing my family office and I partnered up with other people. We had a multi-family office strategy. That's different. We're all still making the same decisions. Now I'm actually having a fiduciary responsibility
Mm-hmm.
of having the
Yeah.
LPs as entrepreneur. So I don't want to like over promise and under deliver. My theory is simple. You go on a lot of dates and you figure out who you want to marry. I'm
Sure.
pretty sure that's how most people
Yeah.
get into marriages too, right? So my thing is, let's write dating checks.
Mm-hmm.
Let's write small 25, 50K checks into companies that are under 20 million valuation, pre-seed the seed, and see how they do the next 18 to 24 months. And then who's green, who's yellow, who's red, have our internal ranking, and then invest in the top performers.
Yeah. And then you
Because
double down.
that's what other venture funds do.
Yeah.
They have follow-on capital. I don't have follow-on capital.
Mm-hmm.
My follow-on capital is telling my LP, this is the winner, go direct. I don't want to make more money off you because we pulled our money together. We know this is the winner. If you have enough money and conviction, put more money into this to outweigh the losers. I still feel we're going to make a return, but you get more money back because now you have more data. If you have like one sigma confidence, you don't go to Vegas and bet every time. Like
Yeah.
if you know you're going to win that blackjack hand, you don't put more money down. You're going to bet the same. That makes no sense.
Yeah, I got two pieces. I mean, so I would say when you talk about over promising, there's years and years of data and there's performance data. So as much
Mhm.
as you're promising, if somebody is savvy enough to kind of look at what you're promising and just look in general, there's what, like around 3,700 venture funds in the world, right? So,
Oh,
so
easily.
you can, so it's not that many funds in the VC space. So it's very easy now, especially with complex, not even complex data, just basic statistical analysis. You're not going to be hitting, if you're an emerging manager, you're not going to be hitting more than like a 5x cash on cash. And that's probably like the top performers of the entire fund, right? So someone that's promising any more of that is probably like a crypto entrepreneur or something. But
They can't
there's only so much that you can
promise that. Yeah.
overpromise. Yeah, and some of the
Yeah.
funds that have raised the most amount of money have had the most horrible performance, and what gets them over the line, it's them investing in marketing, them investing in their brand, them investing in the relationships, building the trust. And the reason I'm bringing this up is because I talked to a manager yesterday,
Yeah.
and the manager was trying to ask me about advice on, what my take is on the market. And I'm not
Mm.
CB Insights, right? I'm not PitchBook
Yeah.
and
Yeah.
CB
Yeah.
Insights to be the qualified person, say, hey, the market's
Mm.
great. Here's the outlook. I think, and this is what I told him. I said, look, if you think about
Mhm.
it, and I mentioned this to somebody, 40 minutes ago, if you think about it, everything is hard. Marriage is hard. Having kids is
Mm.
hard. I was an engineer. That was difficult, right? So if you think about it, everything is hard, maybe in the beginning, but once you do it, it still could be hard, but then over time you get used to it. You've kind of understood how the flow of things could be, and if you've been in management for long enough, especially in a high risk asset class like private equity or VC, you are going to lose money, but that's why you have a diversified approach
You have
to
a
mitigate the
strategy.
risk.
Yeah.
Yeah, and
Yeah. You
you still may not return all of the capital to the fund, but and the LPs, if they're sophisticated enough, they're aware of that, but they're backing you, and
Mhm.
in my mind, that's the whole mentality that you have on life, right? Like when you marry somebody,
Yeah.
you don't know that marriage is going to work out, but you're believing that it will when you're
Well, there's
backing
going
up.
to be ups and downs.
Yeah. And same
Yeah.
thing with managers. So there's a question here in the chat, and I want to kind of double click on that question. So, what
Mm.
slide of a pitch deck are you most excited to see? So maybe you can partition that into when you're looking at funds and then also when you're looking at
Mhm.
companies.
Let's see. When I look at funds, I tell people this: how much money are you putting in, and what have you actually returned? I don't care if you haven't returned. If you're fund one, that's totally fine. But like,
Mhm.
if you're gonna tell me you're a manager of money, then how do you manage money? Don't tell me you have unrealized gains. That doesn't mean anything. Like being a manager of money means you find ways of financial engineering returns. You have to,
Mhm.
right?
Yeah.
If you know a company's not doing well, if you know a company's doing great, like you're in Vegas, you don't take a little money off, you put your principal back, and just ride it out on the winnings. Like, why wouldn't you do that?
Sure.
So I really care about like that you actually have money to put
Hmm.
in, and if you have actual like returns, and if anything you've done. Because I see
Yeah.
managers in their 20s, like, oh yeah, I went to MIT and like I'm raising 1 million or two. Like, so what?
Hmm.
What life skills have you had to be able to manage someone's money? Like that doesn't make any sense. What have you returned? When it comes to founders, it's really like I'll tell you my grading philosophy, right? And it's out of 16 points. And I'll tell everyone this because it's just my grading philosophy. When I was at MIT, I had a great professor named Jonathan Burns. He unfortunately passed away about a year ago, and he had this theory on getting enough data and enough time, right? You just need 70% confidence to get to a decision as any kind of business leader or any decision maker.
Yeah.
To get to like 99.9996 sigma, how much money and time will that take? That's way too much money and time. So if you have 70% confidence, when I tell people one sigma, 69, you got to make a decision, right? It's better than 50-50. You have to make a decision. So when I look at a pitch deck or I look at a team, I'm basing it off, look, one, It's a team. That's out of 4 points. The next thing is the business. What is the business? 1 out of 4. Then the valuation and the people around the table. That's number
Mhm.
3. And 4
Sure.
is, guess what? I don't run the New England Medical Journal, right? I run Entrepreneur Ventures. So how can entrepreneur help you? Right? That's what's important. I don't do cancer research. I'm not a scientist. I'm an engineer or a business person. So out of those, I rank those 40 categories 1 to 4, and my
Yeah.
bare minimum score is what? 12 out of 16. 12 out of 16, 75%. C's get degrees. No one gets 16 out of 16. Nobody. Like you would have to be really confident if you give him someone like a perfect score. But because this isn't the SATs, right? It's not like there's
Mhm.
an answer for everything.
Sure.
Like there's no perfection in what we do. So my thoughts are, look, team, business, valuation, and alignment with entrepreneur. Those are the 4 categories I look at when I look at pitch decks.
What are some characteristics of the most successful founders that you've seen that you've invested in? Talking about pattern recognition, when you look at the highest returning deals, what were the characteristics of the entrepreneurs that you invested in?
There is a fine line between like truly relentless and understanding the situation, right? There's some people who are like, yes, passion is amazing, like grit, you talk about that. There's books and business stuff written about that. But they have to understand that there are times when you have to reassess, that you have to pivot, that you have to ask for help. Like that's the thing I find the weirdest is like, well, you just wanted my money. You
Mhm.
didn't want anything else. Like you didn't want to ask me for advice. Like it was just money. Then okay, then you're probably not the right. We're not probably not fit because like I can't believe anybody just did it all just with money. If you're like gonna gamble, yeah, you need money, right? And you might not need algorithms to trade or whatever, but you need money. Like I get that. But to build a business, how much changes every day? Like if you're doing the same thing you were a month ago in a startup, you're probably failing because there's no way you could do something that you don't have to tinker with. Like here's the best analogy I told people all the time. It's just like this. Like when I took that job at Cummins, this guy who was my boss, Mark, he said, "Look, you go work at the Memphis, parts distribution center at Cummins, because all the gears, all the turns and knobs are built. Like with
Mhm.
that facility is running at like 99% efficiency. Like
Sure.
we are under 80% here in Shanghai.
Mhm.
Like you will literally come and build it with me." And that's the thought process, being an entrepreneur and a founder. It's like you're literally building everything. The whole like you're literally building the plane as it's in the air. All
Sure.
right. So it's like you might crash land this thing, it's okay.
Mhm.
It fails. But it's different being a manager of a Fortune 500 company because everything's built. You just need to turn the dials and make sure, and increase by 5%,
Sure.
returns or 10%. I'm asking my founders to double or triple their revenue year over year. That's not easy. That takes a different type of person than someone just managing a huge organization, and that's totally okay. A Fortune 500 CEO is different.
Mhm.
They shouldn't be a founder of a startup.
And so you've invested in several managers. What are some of the observations or learnings, maybe in the last quarter, that you've arrived to?
Mhm. There's some people I'll never give money again, right? Because like they just think they know everything,
Interesting.
and that's okay. And that's okay.
Hmm.
That's totally fine. But I just don't think you don't ask for help because you have to build relationships. This isn't like I don't think Andreessen just does every deal by themselves. They could, they absolutely could, but they build like they go to all these networking events too. They go out and like host
So
things.
there's a saying, this is kind of bad, but I've
Mhm,
heard somebody say this: LPs are like mushrooms, right? You feed them
mhm.
and you keep them in the dark. So is that what you're kind of
Yeah.
feeling? Like, do you feel like the managers are like, "Shut up, I'm the manager. I know what I'm doing. Here's your K1." Is that kind of is that what you're trying to tell me?
Yeah, those are the kind of guys I don't want to
Yeah,
invest in because like I want to know how the sausage is being made.
sure.
Like explain to me because it's like my favorite thing is just like when you haven't returned anything.
Hmm.
And like I had a manager, he wanted me to put in fund one, fund two, and asked me for fund three. And when the time for fund three came, I was like, oh, we took too much institutional money. We don't need your money anymore.
Hmm. Interesting.
Like, what is that? Like you
Yeah.
offered me like forever to put 250
You don't
every
forget the
time,
day one
and now
people.
like, yeah, and I'm like, what the hell is that? It's like you haven't returned all my money yet.
Yeah.
So like now you're too good. You're good. Way too big now. Like
Yeah.
what is that? What kind of
Sure.
thought process is that? Like you 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 only asked me to invest in your shitty deals. What about the good deals?
Hmm.
Like I don't. You should only give it to people with side letters. Like it just doesn't make sense. I would never do that. I would never do that to my LPs because like that's why I'm a good manager of money too because I know what it is to be an
Hmm.
LP.
Sure.
Like I'm
And I
not
would say too,
pretending.
there's a balance. There's a fine balance, right? So there was a manager that I met. I went to one of their, their AGMs. This was like maybe three
Mhm.
years ago, but I was very impressed with the way they handled it, where they they really appreciated their LPs. Many of their LPs, and this are past entrepreneurs, right? So there is some
Mhm.
operational expertise and
Yeah.
some insight that they can add. But at the same, so what they've done is they've added kind of an advisory group. They let the LPs kind of have a voice, but they're not the on the investment committee making the decision to make the investment. Because if you do that, you're essentially almost like a contractor
Yeah.
or an employee to the
Yeah.
fund. And LPs
Yeah.
probably don't want that, but they really appreciate just some type of seat at the table where they're somewhat involved. You're still managing their money. You don't always have to give them every single granular detail. Obviously, in your
Mhm.
LP update, you're going to have the highlights and the lowlights, right? Of like just the high level overview. So you don't have to be super overly, um, you know, granular in terms of every single thing that's happening at the fund or every single thing that's happening at the company. As long as you give enough information for them to be informed and not be turned into a mushroom, right, sitting in the dark. So I think if you
Yeah.
can balance that, where you bubble up the relevant information that is a need to know, but you also lean in. Maybe you do some community events, or maybe you do some investment update meetings where people can ask questions, and it's almost like a mini town hall that's maybe a little more intimate. Maybe that's kind of the fine balance. I don't know what you think about that.
No, that makes sense. I think it's like this, Joel. It's pretty simple. It's like the more money you make, the
Hmm.
bigger asshole you become.
Sure.
That's my experience in
Well, I
people I've
think I
run money
don't.
for.
I
And
my spin
but
to
no,
that
let
is,
me
I would say this. I think the more money you make, I think the more real aspects of yourself come out. So I don't think that in my opinion, I don't think you'd always be an asshole, but I think your real self does show up.
no,
Your
you don't let
real
me
ship.
finish. You don't let me finish.
Oh, okay.
You don't let me finish. That's not my
Yeah.
point. That's not
Yeah.
my point. It's not about your personality. It's like the more money you make, the more opinion you become. You're like my dad was very opinionated, like, and he was the
Sure.
best at what he did. And here's the thing: he didn't need partners. He
Yeah.
needed what to do. So that's what I'm saying. If you want to be a manager and you've been successful, then to be your own family office. That's
Hmm.
my point. Like you don't need to take other people's money
Yeah.
and like and take their fees. Like if you want to be communal, if you want to work together, be a manager.
Sure.
But the moment that day comes when you think you're too big,
Hmm.
then don't be a freaking manager anymore.
Yeah.
Right? Just run your
Just
own money.
allocate.
Because
Yeah.
isn't that the goal? That's what I'm saying when you become a bigger asshole. It's like, just do it yourself. You don't need other people's money.
Yeah.
Why are you scared to just put your money on the line? Right?
Absolutely.
That's my point. Because like I put $10 million of
Hmm.
my own money on the line.
Sure.
I'm not pretending. I'm not wasting other people's money.
Yeah.
Right? Like I'm not playing with house money. I'm playing with
Hmm.
my money. That's
Sure.
what I think. And managers, a lot of them, you could tell if they're scared. They're just like, oh, so selfish. They want to like risk other people's capital instead of their own. And that's what I mean. Like the
Hmm.
day you don't want to be communal, you don't want to work together, don't be a manager.
Yeah.
That's what I mean being an a-hole.
Sure.
Because like you can be an a-hole. Like here's the thing, I love working with a-holes because they
Hmm.
they know what they want, they know what they do. I can't work with scumbags. Because scumbags,
Hmm.
they don't want to, there's no trust. I trust
Yeah.
an asshole because
Yeah.
that's who they are. That's what they're good at, you know? But and that's why you don't want to partner with
Mhm.
certain of them, and that's okay. That's
Yeah.
what I think is the difference. It's just like if you don't want to work together, if like talking to me as an LP is like worse than being in like prison or like being in the hole, then why are you doing it? Like, and people do, like
Yeah.
people stop being managers.
Sure.
They run their own businesses
Hmm.
because they built their wealth that way, and that's totally fine.
Sure.
But that's what I think you should be if you want to be a GP.
Yeah. No, I totally agree. I mean, I think there's a whole business of being a GP, right? I mean, that is the business that you would run, right? If you can I feel like the successful people that do it, that is a business that they run, right? If you do it right, you're making money for people. That's your skill. That's the product that you're selling. and you're rightfully charging fees because those fees are essentially, obviously the cost to get access to that product. And hopefully you're able to do this in a repeatable, consistent, maybe not always predictable way, but at least some type of consistency where you're providing updates, providing, insights into like how the investments are doing. But like that is your business, right? And if you don't think that's the business that you can be an expert in, and really, really build an investment man, kind of like Blackstone, right? Blackstone, their business, their startup was Fund One, then they went to Fund Two. Now they're doing everything, right? They're doing private credit, they're doing hedge strategies. So they're building a conglomerate, kind of like the Entrepreneur magazine did with magazines and brands. They're just doing that with the capital being a product. But to your point, yeah, that's not really a good fit for you because it's not for the faint of heart. Maybe go back to building, something in your industry or what you studied.
Yeah.
So, what would be, I know we got 5 minutes left and, super gracious for your time. Give us some advice that you would share. So I got, what I pulled from the managers is, what I pulled from your initial nuggets of knowledge is, don't forget the day one homies, right? The first people that backed you in the beginning, those people, you got to try to take care of those people because they believed in you in the beginning. I'm a big proponent of that because I built some businesses and there's some people that actually started as customers when they didn't even know who I was. I didn't even have a website. So I agree with that. What other advice would you give for managers that are, trying to go out and close capital, and then maybe for founders as well, and this could be just kind of triggered off of just some of the things that you've been dealing with in the last couple months.
Yeah,
right?
This is it, Joel. And this is the most absolute truth. Like just how you have to be careful who you choose to marry, right? You gotta be careful who you partner with, right? That it really takes, you think like, oh my God, that guy has a great background. She has an amazing background. And you think we could fit it together. And it's like, you can't put a square into a circle. You have to really like, and here's the thing. I want to be able to work with people who are like, we could cuss each other out. And then later on, it's like, oh, where are we going to go eat? Like, like that's the relationship. It's like, you have to be brutally honest and open. You can't have anything simmering, or you're going to hold that grudge inside of you. Like, or this pettiness. It's just like, there's no point. The people I work with now, the LPs that I want, these are people I want to hang out with. And it's a pleasure. It's fun for me that I enjoy their time. I mean, I don't need to do this, right? Like I've already run a successful business for my father. I could just live off of that, but that's not who I am.
Sure.
I want to build something myself, and that's what Entrepreneur Ventures means to me. And I still love working with founders. I'm going to go right after this and go meet new founders selling their new food and CPG products here at Expo West. And that's what still gets me excited, and like finding ways to help each other. It's the funniest thing. It's like, you remember more of the struggles than you more of the successes. And I think that's me at least, and that's what's going to get you through whenever you do. Like you could hit something on the slot machine. Can you repeat it? Like that doesn't mean anything. It's like, oh, now we've gone through so much that now I could tell. And it's the funniest thing is like I teach a class now in entrepreneurship, and it's so cute when these kids are just like, oh, these ideas. I'm like, man, you're not the first person to think of that. Or I would think of this or that. And it's just through experience. It's not any fault of their own. They're just 18 years old, and that's okay. You just have to have really good mentors, older and younger, and see things differently in total different lights and keep building your network. And that's what I tell people. Make sure you find the right partner and keep building your network. That's it.
Yeah, I totally agree. And I think, there's great products out there that nobody knows about, or they just don't, share the story that well. And those products are just such a waste because they're good products, right? And I watched The Founder with my son, with my 8-year-old son. And, I enjoyed watching it again. I watched it like a few years ago, but it was so amazing to watch it with him because he was just like sitting on the edge of his seat. And you can just kind of, I feel like they need to offer more entrepreneurial classes to, 5-year-olds and 10-year-olds, because that's what America's built on, right? Coming up with problems that you fall in love with and building a business that can solve those problems. And, I just really loved the movie because the two brothers, right, that started McDonald's, that was a great
Yeah, for
product.
McDonald's.
This was a great product, but they just didn't really know how to think through distribution, and it was only until Ray Kroc came in that it became McDonald's. And I see so
Yeah.
many companies. That's one of the biggest things that I see, especially when it comes to pre-seed. There's a lot of companies that have all these bells and whistles and features, but there's no real traction or any customers or pathway to revenue. And I think that's kind of been my biggest struggle with pre-seed. And I may not be the best pre-seed investor. I just think for me, I like to just kind of see a little bit of traction. So, real quick, I know we got 2 minutes left. I wanted to kind of circle back with Entrepreneur Ventures. So it sounds like you guys are doing some CPG.
Mhm.
Are you guys more of a generalist, or are there other sectors that you kind of?
We do consumer tech
Okay.
and frontier tech and just pure tech, enterprise B2B. So it is somewhat generalist, but we can't do certain things. Like we can't do biosciences, we can't do
Mhm.
really hard tech. But we are open, because we are not the only check writer, right? Like
Yeah.
we're going to finish out a round because we give you more than just money. We
Mhm.
give you our exposure, right? We'll
Sure.
get you on our elevator pitch show. I'm building our podcast network for our entrepreneurship and VCs and startups. I'm also writing for the magazine soon and doing our .com pieces. And sometimes you can't explain your story, but if we get someone else to look at you
Yeah.
and explain it, who's good, a
Mhm.
ghostwriter or a reporter, that goes a long way. We've had articles written that helps our founders raise more money and get
Yeah.
them more exposure because sometimes that's what you need. Like, because guess what? You're a founder. You're not a journalist or reporter. That's not
Mhm.
your skill set. That's
Yeah.
my whole point. You have to keep building your network and finding people to tell your story, writing the right CMO, right salesperson, right tech person to help you keep growing. Like, so you might be good at managing people and raising money, but that doesn't mean you are good at other skills.
Absolutely. Well, hey, Jonathan, this was amazing, man. I really love learning about your family, your dynamic with your father. I think that's so important. That's what formed, who you are. And then just kind of seeing the journey of how you've grown as a person, and excited to see you continue to grow. And hopefully I can come on the journey with you and learn with you. So it's been a lot of
No,
fun, and appreciate all the
I love it.
knowledge. And we've had a lot of really intimate touch points in the last couple months. So it's been, good doing stuff with you
Absolutely.
and making all of us grow together. So appreciate everything you do.
No, thank you, Joe. And I really love what you're doing with the community. I mean, look, there's a lot of people who are fakes out there. I could what you're doing is genuine and sincere and it's helpful. And I hope people out there, it's not just about raising money. It's like, oh, Joe can't raise you money. It's not a failure, all right? Like he's giving you a lot more than
Yeah,
that.
absolutely.
So
Yeah, like I mean, we are mainly just the platform, and
yeah,
for me, just kind of it's helped me be a better investor. I mean, there's that component, which is you learn from other people that are smarter than you, and all these stories are like just kind of an accelerated way to gain that knowledge much faster and connect with good people. So, anyways, Jonathan, thank you for your time, and everybody else, thanks for tuning in, and I'll catch you guys on the next show. So appreciate it. All right.